Oh, get out of here. Okay, you're live, Jeff. Break a leg.
All right. Thank you very much, Greg. I appreciate that. I'm Jeff Gibby. I'm going to read a legal disclaimer, and then we're going to kick off with Steve Primo, a good friend of Metastock and a good friend of mine. So let's go ahead and get started. As promised, today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock should have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. I'll add that Metastock and its employees are not paid to endorse a security. We're not recommending the purchase of a security, nor are we paid for the endorsement or the promotion of a security. So with all that being said, thanks for coming. It's good to see you. If you're watching this in the future, I hope everything is well. If you're watching this on YouTube, make sure to like, subscribe, comment, ask questions, anything you want. We'd love to hear. Also, regardless of where you're watching, if you're watching us live, feel free to ask questions. We're really good at answering the questions that come in. If you're in GoToWebinar and watching us in GoToWebinar, the questions, so you'll see a questions box off to the right-hand side. Click on that, you can submit your questions. And if you're on YouTube, just chat them in. Well, we're watching that too. So without further ado, our first guest, or our guest today is Steve Primo. Steve has been working with Metastock for a number of years now. Big friend of the theme of Metastock and the software. He's going to talk about, to give you some background, Steve actually did a lot of trading on the Pacific Trading Exchange, or the Pacific Stock Exchange is actually what I meant to say, and what I did say. But the strategy he's going to talk to you about is a strategy that he's been using for decades. And the thing I like about Steve is he kind of presents things in a no-nonsense way that's very, very easy to understand. So without further ado, Steve, I'm going to go ahead and turn the time over to you. I'm going to make it presenter. I can hear you?
Yeah, thank you, Jeff. I'll show my screen. And hopefully you can see everything.
Yeah, there you go. First try. Sounds good. I can hear you. I can see you. And I'm going to get out of the way. It's your turn.
Okay, great. Thanks, everyone, for attending today. Thanks to Jeff and Greg for setting this up for me. And welcome to this educational presentation today, where I want to talk to you about a strategy that I truly believe could turn your trading around, because I know from firsthand experience how it turned my trading around. It's very simple. And I'm going to actually give you the first two entry rules to this method, so you can actually start applying them to your own strategy and see how they could actually help and elevate your trading. But first, I'd like to start out by sharing with you an example here of a chart as we look at ZS. Let's say you're interested in this stock, okay? It's been going up. You're excited about it, but you see the last day it gapped up, and you're starting to worry that maybe things are going up a little bit too quickly, too soon. Maybe someone in the chat room or someone on TV said it perhaps is overbought and it's a little bit too high. So maybe you don't want to buy after all. So you say to yourself, you know what, I'll wait. It's probably going to come down, maybe a pullback 50%, and I'll buy it once it gets down there, okay? Well, with what we're going to be teaching you today, you would have known that the stock was not overbought. In fact, with the first two rules that I share with you, it actually generated a buy signal right on that very same bar. And you could have potentially captured 75 points. And the good thing about this method is that if the requirements are met, it will continue to generate signals along the way, because another one was generated right here just about a few weeks ago. So this is what I'm going to be talking about today, a strategy that I truly believe could turn your trading around. So welcome once again. My name is Stephen Primo. I am the president and founder of Specialist Trading. If you're new to my webinars with Metastock, I've been trading now for nearly 50 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist. That's where we get the name Specialist Trading. A specialist doesn't mean you're any more special than anyone else. It just simply means that you specialized in making a market in roughly about 50 or 60 stocks. So just in the old days, just to show you how antiquated things were when I first began my trading career, let's say you wanted to buy or sell a stock like IBM. Okay, well, you would call your stockbroker on the phone. He would put you on hold and say you want to buy 100 shares of IBM. He would call the floor trader on the floor of the stock exchange and say, please buy me 100 shares of IBM at the market. The floor trader would take your order, walk up to the trader who specialized in making a market in IBM, which is actually one of the stocks I did make a market in. And then I would actually sell him 100 shares, or if he had a sell order, I would have to buy the 100 shares from him. So this is what I did, and this is the way the process worked going back some 5 decades ago. I made markets during the crash of '87 and the bull market that followed. I left the floor in the mid-90s to manage money and to trade my own account. And I started teaching roughly about 15 years ago. That's where I formalized specialist trading. And that's where we just devote all of our time to educating traders. We are first and foremost an educational company. That's what we do. We teach traders around the world. And I'm happy to say in over 115 countries, all of the tips and techniques and methods that I've accumulated in my nearly 5 decades of trading. And hopefully we can teach you these things to elevate your trading, to sustain you for hopefully roughly about 50 years as well. Now, before we begin today's educational class, I just want to have you take a moment to view our disclaimer. I'm going to share with you a lot of performance results by using this strategy, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are first and foremost an educational company, all examples are strictly for educational purposes only. Now, another way to get free education on a daily basis is to follow us on X, formerly known as Twitter. There's our handle right there, abbreviation for specialist trading, at SPCLST-TRADG. I post anywhere from 5 to 7 different snapshots a day of signals that our methods have generated to little bits of financial wisdom. So there's lots of great free education on a daily basis. So please feel free to follow us on X. Okay, so let's begin today's educational presentation. And I'd like to start out with something that my mentors shared with me, because I make no secret about this. My first year or two on the floor, when I was trading roughly about 50 or 60 stocks, I had a very difficult time. I was doing probably all the things, the same things that you've been taught, right? To look at the earnings, to wait for the economic news and the numbers to come out, to follow about 20 or 30 indicators. We didn't have the internet then, so we couldn't go to trading rooms or chat rooms, but I subscribed to all of the trading gurus. And even after doing all that, all the things I was taught that were supposed to work to make me successful, well, I really couldn't make a dime. I was barely treading water. And I was lucky enough to have some mentors on the stock exchange floor that saw how much I was struggling. And I remember one of the first things that they taught me was this. They said, Steve, trading is really simple. It's the trader who makes it actually more difficult than it has to be. I mean, think about it. Do you have far too many things on your screen, or are you following far too many markets trying to make ends meet by being involved in, a long-term project here, a short-term trading project here, crypto here, currency pairs here? Are you involved in too many markets? You have too many indicators? Are you following too many so-called trading gurus? Well, that really is what most traders do. And once again, that's what I did. But if you really want to get on that road to consistency, where you have a 2 steps forward, 1 step back approach, it's more about simplifying your trading. Because if there's one thing I've learned in nearly 5 decades of trading, it's the simple things that work rather than the complicated ones that do. It's the easiest thing in the world to overcomplicate your trading, but it's the most difficult thing in the world to simplify it. Now, I'm going to share with you a couple of rules in today's strategy and show you how simple they are. In fact, you almost won't believe how simple they are, but they really work and they're extremely powerful. And you can go back and see for yourself and see how they could have helped your most recent signals. So what we're going to be talking about today is what we call strategy number 4. This was the first strategy that my mentors taught me, and I've actually been trading it on a daily basis now for nearly 5 decades. Some of the highlights of this particular method are it's a pattern recognition strategy, meaning that it's not based on any fundamental news. It's not based on overbought, oversold. It doesn't rely on moving average crossovers. It's simply looking for a pattern that repeats itself over and over again in virtually any market and in any time frame. Now, it's designed for traders looking to catch momentum. And the beauty of strategy number 4, it will often identify momentum by generating a signal before you see that momentum build up on the chart. And you'll see that in a number of examples where a signal is generated where it looks as if the stock is doing absolutely nothing. And then a day or two later, momentum kicks in. Now, it only uses one indicator. Talk about keeping things simple. I'm going to share with you what that is in just a few minutes. Now, the advantages to trading strategy 4 is it's extremely consistent. I know a lot of you say, well, oh, that's great. A consistent method means it has a lot of winners. Excuse me. No, that's not really what consistency means. Consistency is an awareness that you actually will have losses from time to time, and that's okay. But a consistent method is one that's able to recoup those losses, often on the very next signal. So what you want is as we said before, a 2-step forward, 1-step back approach. Now, strategy number 4 makes you a part of the process. This is extremely important in our teaching to all of our students. We want you to be a part of the process, a part of the decision-making process. This is not a black box. You know all the rules going in. We share with you all the exit points, all the entry points, all of the stop placements. It's up to you to decide exactly how you want to apply it. And lastly, it is designed to be as simple as possible. In fact, there are only 4 rules to this strategy. That's what we call it strategy number 4. And I'm going to share with you the first 2 rules of this strategy, okay? All right, so let's go over strategy rules 1 and 2 for strategy number 4. And rule number 1, buy or sell signals can only be entered either above or below the 50-period simple moving average. In other words, if price is below the 50-period moving average, you will only be looking to generate a sell signal. We will never generate a buy signal if price is below the 50. And if price is above the 50, we will only be looking to generate buy signals. Okay, we will not be looking for sell signals. The reason why we use this is so important, and why it's rule number 1, is because you will be in sync with the overall trend. There's no reason to look at different time frames. There's no reason to look at moving average crossovers. There's no reason to look at some type of higher high, higher low pattern to see if you're in the trend. The simple rule of applying the 50-period moving average takes care of all of that for you. Let me show you what I mean here. As we look at this chart here, we see the 50-period moving average is based on the bottom there, and price is above. So what is this telling us? It's not some guy in a chat room and not some guy on TV, but the market, the chart in front of you is telling you the overall trend is up. And since the overall trend is up, that means we will only be looking to identify buy signals where this pattern generates buy signals. That's it. Now, conversely, if price is below the 50-period moving average, the way it is here, we're never going to be looking to buy. I don't care how often or how much someone may say, oh, this is so oversold, you have to buy it. If it's below the 50, do not buy, only look for sell signals, because you will have a higher level of consistency if you are in sync with this simple rule. So if the market's telling you that the overall trend is down, well, you want to be in sync with that. You want to only look for signals that the pattern generates that will tell you that the market is going lower. Now, if you don't believe me how powerful this simple rule is, you have access to a 50-period moving average right now. Simply plot that and go look at your last 10, 15 signals or trades that you took. I can almost guarantee you that the ones you lost on, the reason why you had losses was because you were out of sync with that simple rule. You were buying below the 50-period moving average and selling above. Now, sure, every once in a while you'll get a phenomenal buy signal that's below the 50, and you'll get a phenomenal sell signal that's above the 50. By selling, I mean to go short. But remember, these are similar signals to the slot machines in Las Vegas, meaning that they're designed every once in a while to give you a winner with all the bells go off and you can hear the money clinging in the tray, because they know if you stick around long enough, you'll give it all back. And that's the way it is with trading. And you buying below the 50, you'll eventually give it all back. Or you sell short above the 50, you'll give it all back. Take it from someone who knows. That's the way I used to trade in the beginning. All right, so that's rule number 1. Let's go on to rule number 2 now. We know what the overall trend is by applying the 50. What about the short-term trend? Well, buy and sell signal bars must close either in the top or bottom 25% of their range. I know this sounds a little wordy and a little confusing. Let me share with you what I mean here by showing a description. Let's look at this generic bar, all right? This could be a 1-minute chart. This could be a 1-month chart. It makes absolutely no difference. But if it's above the 50-period moving average, meaning that the overall trend is up, now we want to see where this closes, if it closes in the top 25% of its range. So what you want to do is divide by 4 separate but equal parts. And if you close in that top quarter, that top 25%, well then the market, not me, not some guy on TV, not some economic report, the market is telling you on the short term that it wants to go higher. So now, if you're above the 50 and you see a bar like this, you have the short term and the overall trend in sync. There's no reason to look at two different time frames by overcomplicating your trading. There's no reason to look at different market moving average crossovers. Don't overcomplicate things. You just keep it simple with one chart, one bar. Same thing works as we can see here. We have a close in the top 25%, price went higher. And someone could say, yeah, but Steve, look at it, fell again. Well, sure, if you were short, you'd have to be very quick because what do we have here? Another close in the top 25%, and look what happened after that. So how advantageous would it have been to your trading to have one down bar here where you could have actually ridden this large trend to the upside? Now, this can also work to the downside as well. Here we have a generic bar here. Once again, it could be a weekly bar, it could be a 5-minute bar, makes no difference. But what you want to do is if you are below the 50-period moving average, you want to divide by 4 separate but equal parts. And if you close in that bottom 25%, the bar and the market you're trading, it's telling you that the overall and the short-term trend is in sync, and now it wants to go lower. That's how simple trading can be. You don't have to get it more complicated than that. And once again, if you don't believe how powerful these two simple rules are, go back and look at your last 10, 15 trades. And if you had applied these rules, how they could have helped you with your current strategy. Now, these make up the first 2 rules of strategy number 4. I'm sorry, I can't divulge what the remaining 2 rules are of the pattern. It wouldn't be fair to all of our students around the world who purchase this, who are currently trading it. But we can show you how simple it is and how it would have worked on this generic chart. We have closing in the bottom 25%, and look what happened after that, okay? This is why you don't want to be a buyer below the 50-period moving average. Okay, so now that you know these initial 2 rules, let's look at some recent strategy 4 examples, and we'll show you these 2 rules in action. Okay, here's a chart of Robinhood, Hood, H-O-O-D, okay? Someone just looking at this chart, just off face value, would say, wow, Steve, it's just going sideways for the past 2 weeks. There's really nothing we can tell here. But that's not true. If you apply the first rule, the 50-period moving average, well, sure, nothing is happening, but the overall trend is up. And that means you just have done half the work. You know that you should only be viewing this from a buyer's perspective. The odds are in your favor that if you are looking at this from a buyer's point of view, you will have a successful trade because you are in sync with the overall trend. Now we want to be in sync with the short-term trend, so we look for bars that close in the top 25%. We have a number of them here. We have one here, here's one other one, here are one more and one more. But it does not mean that these are all buy signals. We have 2 more rules, 2 more requirements that need to be met. And if we apply those 2 more requirements, we see that we have 2 signals, right, on these last 2 bars, 2 buy signals. And you could have taken advantage by buying either one. And look what happened to the stock. Coming into this month, it was up 25 points. In fact, it went almost straight up. See how simple that was? We're not looking at any fundamental news. We don't care what economic numbers are being announced. We don't care what the earnings are. We don't care what's going on around the world. The stock chart in front of you tells you just about everything you need to know. And if you miss those 2 signals, well, guess what? It provided you with 2 more along the way. Let's look at this example in MU, okay? Now, micro here is going sideways. It's a sideways market. We're always taught that to stay away from these markets. Why? Because, well, when you buy, it goes down, and when you sell, it goes back up. You get whipsawed. So we're at the point where we say to ourselves, I don't want to trade markets like this because this is where I always lose, and they're really not advantageous markets to get involved with. Well, maybe, maybe not, because we haven't applied the first rule yet. We applied the 50-period moving average, and even though it appears like we're in a sideways market, we're in a sideways market, but we're also in an overall uptrend. So this is telling us that even though we may be doing nothing for the last month, we should be viewing this from a buyer's perspective. So we look for bars that close in the top 25%. We see a number of them here. But which ones qualified for a strategy number 4 buy signal? And we see that we had a total of 3, these 3 right here. And look what happened after that. This was just a couple of months ago, and 33 points straight up when the momentum kicked in. Remember, we said that strategy 4 is an amazing strategy because this pattern that we teach you in the course looks to identify momentum before it's even kicked in. As you can see, if I go back one spot here, we see that there was no momentum at all. It was going sideways. But the pattern that we teach you was telling you, no, we are building up, we're coiling for momentum to the upside, and that's when it kicked in. So the beauty of strategy 4 is oftentimes you will get in before everyone else knows about it, even before a news announcement has taken place. Let's look at TMUS, okay? Someone could say here, well, Steve, this is major support. I took that $10,000 course on support and resistance, and this is where all the institutions are buying, so I can't go against the big money, right? They're always right. So I've got to be a buyer as well. Once again, this is why most traders fail, myself included, when I first started trading, because I was listening to outside sources that didn't really have a lot of consistency. First thing my mentors taught me was to always apply the 50-period moving average, because that will tell you what the market wants to do most of the time. And even though you may think there's support, even though there may be support, some big bank may be holding up price right here, the market is saying, well, my bias is to the downside. And if you're going to be betting on anything, I wouldn't bet on the institutions, I would bet on the market. And the market's telling you it wants to go lower. So we look for bars that close in now in the bottom 25% of their range. And as we can see, we have a total of 3. So we had 3 chances to go short. Now, when we say sell, we're not talking about exiting a position. We're talking about actually shorting, going short the stock or buying puts or some type of spread strategy with a downward bias. It's up to you. We're not an option class or course per se. We just simply provide our students with high probability setups, how you want to trade. If you want to trade through options, if you want to actually trade the stock, it's entirely up to you. But either way, the market is telling you it wants to go lower. And look what happened. It fell 20 points in the following week. Now, what happened to the big support there? What happened to the institutions? I would always follow the market before I follow an outside source. Let's look at MDB here. All right, we are above the 50-period moving average. We have 3 buy signals, but nothing has actually happened. Now, in the course, we teach you proper stop placement. We teach you money management. So you most likely would have been in all of these examples here, providing you place your money management with what met your standards. But most likely you would still be in all of these trades had you taken one or all of them, and that would have been a wise decision, because look what happened days later. The stock gapped up 50 points. Now, obviously, it went up on some news, some event, or some announcement, right? Something positive. Well, how did we know to buy this in advance of that news? Because this isn't based on any fundamental news at all. It's based on a technical pattern that repeats itself over and over again. It wasn't as if the CEO of the stock called me up and said, hey, Steve, why don't you generate some buy signals, because we're going to make a really good announcement in the following week. So it'd be nice if your students had a really good buy signal here. No, we knew in advance of the news. Remember, the market tells you just about everything you need to know. The only trouble is we are not taught to listen to the market. We're taught to listen to some guy in a trading room. We're taught to listen to some economic indicator or some earnings estimate. But once you start discarding, remember, keeping things simple and only follow the chart in front of you, that's where you start to become consistent. And to tell you from firsthand experience, it's a lot easier too. It's a lot simpler to just look at the chart and figure out what this pattern is and look for it than it is to figure out, well, okay, I have this estimate here, but this guy in the chat room says this, and this guy on TV says this, but then there's also some economic report coming out. So gosh, I'm not sure what I want to do. There's just too many variables, but things are extremely cut and dry in all of our courses. Now here's what we call a cluster. This is where you have a cluster of signals and nothing yet has happened. We're looking at UPS here, going back about 2 or 3 months here, where price is below the 50. And when we say below the 50, we're talking about the closing prices, okay? Even though we intersected above, all these closes are below the 50. So that's telling you the overall trend is down. But once again, nothing has happened yet. But when you see a cluster of these signals, in this case to the downside, this is just like a coil getting ready to explode. And as you can see, days later, the stock fell 35 points, well before the momentum actually kicked in. Okay, here we're looking at S&PS. Price is above and then has a real strong downward move. But remember, if price closes above the 50-period moving average, that is a buying opportunity. As we see right here, a buy signal was generated right here using strategy number 4 at the bottom, and it went up 45 points. So you had 45 points to work with. And we have different exit levels for all of our students because we know everyone trades differently. Some students like to take a quick profit and get out. Others like to get as much bang for their buck. So we teach you exactly how to implement all of these because, once again, as a mentor, our job is not to trade for you. It's to teach you how to trade so you can make your own decisions. So you would have had 45 points to work with right there. And then price started to fall back lower again. But since we never closed below the 50-period moving average, guess what? The pattern requirements were met and another couple of signals were generated to the long side. And this time you could have potentially captured now 50 points. So nearly 100 points you could have potentially captured in 2 months of trading. Now here's the opening slide we started with, the stock ZS. Now we thought, well, maybe it's overbought, so I guess I shouldn't buy it because that guy on TV said it's gone up a little bit too quickly and maybe I should wait for it to pull back before I buy. Well, if you had done that, you would have missed a nice buy signal because the first thing we teach you is there's no such thing as overbought and oversold. How many times have you seen a stock go as high as it wants all the time in the overbought zone? Okay, look at Costco. Look at on a monthly or a weekly time frame. It continues to go higher and higher, all the while being overbought. Or a stock can go lower and lower, or market all the time being oversold. So there's no such real thing as overbought or oversold. We're more interested in this pattern. That's all we're concerned with. And as you can see, we are above the 50 right here. So we know that the overall trend is up. And we look for bars that close in the top 25%. And this is the only one that met all the requirements. So where you may have thought that was overbought, the market is telling you, I want to go higher. And it went up 75 points. And if you missed that, well, you had another chance to probably make about 5 or 10 points right here in about 3 weeks ago. Now here's an example of Apple. This is why most traders fail, myself included. This is the way I used to look. I say, hey, we're in an uptrend, right? I mean, this is a classic uptrend, higher highs, higher lows. So I know this is going higher. There's no reason for me to sell short this. I should be looking to buy this. In fact, it looks like it's going to break out to the upside. And that guy in that trading room says it's going higher. So I've got to be a buyer, right? You see how my process of making my trading decision is based on an outside source. What is the market telling me? After all, that's what I'm trading. Shouldn't I get my answers from the market and the chart I'm trading? So first thing I do is apply the 50-period moving average, and the market I'm trading is telling me the overall trend is down. And this is not a buying opportunity. This rise is actually a selling opportunity, giving you a chance to sell short at a higher level. Or if you happen to be long, giving you a chance to get out before it goes lower. So now we look for bars that close in the bottom 25%. And here's one that met all of the rules. Only one, but it was at or right close to the high of that little bounce. So this was just roughly about 3 months ago. And then look what happened. The stock fell out of bed 50 points. Now, obviously, once again, some news or some announcement came out right here where it caused it to gap down. And then it went even lower in the following days. But isn't it funny how we knew well in advance to sell short or to at least exit our position? A lot of our students don't like to go short. They feel uncomfortable. But you can use this as an exiting tool as well. So once again, not based on anything fundamental, even though it fell out of bed, most likely because some news or some announcement. But we knew a full week in advance while it was rising that momentum was pointing to the downside, all based on this pattern we teach you what to look for. All right, looking back in hindsight, here was a great example of a really nice buy signal in AV. As you can see, we're above the 50-period moving average. 2 buy signals were generated here coming into June and coming into the first week in July. up 105 points. And we can look at the same thing to the downside. Stock was basically going sideways, but it was below the 50-period moving average. Right at the very high, a sell signal was generated in NXPI. And as you can see, after that, it went straight down 60 points. Now we can use this intraday. We know a lot of traders don't trade daily bars. They like to intraday trade. Well, here's a 10-minute chart of IBM. This was just about 2 or 3 weeks ago when the stock was going straight up. Looking back in hindsight, we'd say to ourselves, well, gosh, this was a really nice intraday trade here. I would have loved to take advantage, but how did I know it was going to go up? Well, remember, we don't predict anything. We don't know how high something will go or how low something will go. But we did know that it wanted to go higher once we applied the 50. It has been above the 50-period moving average the entire time. And based off this sell-off right here, this was actually a buying opportunity because a buy signal was generated right near the lows where you could have potentially captured 10 points in 2 days. And then another signal was generated here in the next day. Now this can also work to the downside. Here's a 10-minute chart of Tesla. This is going back just about a couple of weeks. As we can see, the stock is heading lower. It's just kind of drifting lower on a 10-minute time frame. And it's in sync with the overall trend because as we can see here, it's been below the 50 and we've had a number of sell signals all the while. But then look what happened after that. It gapped down tremendously and you could have potentially captured 35 points in just 3 days. This is based on a 10-minute chart of Tesla. Okay, once again, let's go through the process and we'll show you why most traders fail. Someone looking at this would say, well, this is a downtrend, right? AXON, this is a weekly chart and we're making lower lows, as you can see, lower lows, lower highs. So I've got to be a seller, right? Or if I'm long this, I should get out. Well, not really. What's the first rule? We apply the 50-period moving average, and even though price has been heading lower, this is a buying opportunity. So since we're only going to look at this from a buyer's point of view on a weekly time frame, we look for bars that close in the top quarter of their range here, okay? The rules do not change because we change the time frame. Makes no difference. So we look to see which one of these close in the top 25%. Okay, we have one here and another one here. But now we have to apply the remaining 2 requirements to see if the signal was generated. And as we can see, one was generated here going back to April. Now remember, this is a weekly time frame. So you could have purchased this for your long-term positions and seen that the stock gained coming into this month 260 points. Once again, we're not concerned with anything fundamental. We don't care about earnings. We don't care about what's going on economically. We don't care about any type of indicator that's been announced economically. We don't care about what someone is saying on TV. Everything is in front of you. That's all you have to look at. Trading is really simple, just the way my mentors taught me. It is the trader who makes it more difficult than it actually has to be. Okay, let's recap what we shared with you today. Remember, strategy number 4 is a pattern recognition strategy. It's based on a pattern with 4 rules that repeats itself over and over and over again in virtually any market, any time frame. It makes absolutely no difference if you're looking at crypto, if you're looking at currency pairs, if you're looking at a 10-minute chart of Tesla, it makes absolutely no difference. This pattern will repeat itself over and over again. And you know the first 2 rules of this strategy now. It's designed for traders looking to catch momentum. And as I just showed you with a number of examples, it will often identify momentum before it's displayed in the chart. You'll often get buy signals where the stock is doing nothing or going sideways before it actually kicks in. So that's one of the best things about strategy number 4. And as we said earlier, you can apply to all markets and all time frames. Now, the advantages of trading strategy 4, it's extremely consistent, meaning that you will have losses from time to time. That's okay. But a consistent method is one that's able to recoup those losses, often on the very next signal. And since strategy number 4 generates a lot of signals, that's a very comforting thing to know that even if you have a small loss here or there, oftentimes the next signal you'll be able to recoup it. It makes you a part of the process because you are actually determining, are you above the 50? Are you, is this bar closing the top or bottom 25 percentile? And lastly, it's designed to be as simple as possible. The remaining 2 rules are very simple as well, but once again, I just can't divulge what they are. It wouldn't be fair to our students around the world who've already purchased strategy number 4. So ask yourself, do you think strategy 4 can help your trading for the remainder of 2025? If you can believe it, we're already halfway through the year. Now, most traders do the same thing. At the beginning of every year in January, they make all these promises and goals and hopes and dreams of where they want to be by the end of the year, maybe make that extra income, maybe go on that dream vacation, or maybe that addition to their home. And most likely by halfway through the year where we are right now, they realize they're never going to see those hopes and dreams come to fruition because their strategy just isn't working. Their method is not seeing the type of results they thought they would see. But do you think strategy 4 can help your trading for the remainder of 2025? I strongly believe, yes, it will be able to. Why? Because I firmly believe it, because I trade it myself and it turned my trading around when I was struggling. So because of that, we have a great attendee discount for all of you taking the time out of today to listen to this educational presentation. We're going to offer you strategy number 4, our most consistent strategy, with a great discount. You'll get instant course access, detailed instruction. You'll learn all the entries, all the exit rules and stop placements, as well as get automatic buy and sell arrows. They're a great teaching tool because even though this is not a black box, we want you to get to the point where you can just look at a chart and just say, okay, that's a strategy number 4 buy signal. That's a strategy number 4 sell signal. And then click on Metastock, the automatic buy and sell arrows, to check your work to see if you're correctly understanding it. Remember, you can apply to virtually any market and any time frame. Now, the normal price of strategy number 4 runs close to $600, $599, which in and of itself, in my opinion, is still a steal. But here's what we're going to do. For taking the time out of your day today to hear me speak, we're going to discount that down to $499. You're going to save $100, $499. Okay, that's a special discount price. But this is for a limited time only. So take advantage of this while you can. Save yourself $100. I mean, you owe it to yourself. Maybe you go out to a nice dinner, maybe you can have a nice afternoon, but save yourself that $100 and take advantage of this great, great offer right now. Here's how to do so. Remember, we want you to take charge of your trading. Take charge for the very first time. Feel comfortable with your trading. Be a part of the process. Here's how to take advantage of this great offer. Contact Metastock. That link you see right there is the link that will take you to the info page as well as the sign up page. I would highly suggest giving them a call. You can talk to one of their trading consultants at 800-882-3040. They'd be happy to fill you in and give you more information, or take your order over the phone and set you up really nicely with strategy number 4. This is a great, great discount for you, discounting $100, but remember, it's for a limited time only. So if you're really serious about taking your trading to the next level, come on board and give them a call, okay? This brings us to the end of the class. If you have any questions, now's the time to ask. I don't know if Jeff, you want to read them, or I can take them personally if you want. Once again, copy down that number as well. Let me open up the question and answer box to see if there happen to be any questions, just in case. Hi, Steve. I had this seminar on my schedule and I worked hard to be here. And then the first thing you say is to show this candle, and now that will only give you 2 of the 4 rules. That is okay. Well, you know, think of it this way. This is for Steven. Think of it this way. Imagine you go out to dinner and you go out to a really nice restaurant, and the owner of the restaurant says, listen, thank you for being a patron. I want to give you a couple of our best appetizers, all right, on the house, and maybe even some free drinks. And you say, thank you very much. And then you order your meal. And then you say, well, wait a minute, I have to pay for the meal too? Well, you know, you've never seen anyone just give you a free meal just for coming in. It's kind of the same with this. It really would not be fair to give you everything and just say, well, we don't care about all of our students around the world who paid the full price for this. So really, the best thing you should do is study this webinar. I would say the best thing is probably to study this webinar as often as you can. And if you're having difficulty with your trading, apply those first 2 rules. I think that you will be happy with those first 2 rules alone if you've been trading for any while, and just make sure that you can see that it meets your needs. But trust me, go back and look, Stephen, at your first 2, I should say your first 5 or 10 signals for this past month or two. I can almost guarantee you that the reason why you were a loser was because you didn't use these first 2 rules that I explained and gave away for free. So that's something that I think is worth its weight in gold right there. Okay, I hope that makes sense. And don't worry, it'll really help you with your trading along the way. I know a lot of traders also say, Steve, you know, I haven't been trading, maybe like this last person, I haven't been trading long enough. I don't know how to do everything. I was really never trained to trade this way. What if I have trouble? Well, if you sign up for this course, everyone gets my personal email address. So all you have to do is contact me via email. You can contact me before the opening, after the close, even during market hours, or even on the weekends. So I make time for all of my students, regardless how long you've been trading. I have students who are hedge fund traders. I also have students who have been trading for 30 minutes. Okay, and so everyone will get access to my personal email address. You can contact me whenever you like, and I'll get back to you just as soon as I can. Okay, so that's the best way. If you're having difficulty trading, if you're having, if you don't have enough experience, now is the time to take advantage of this, and it will take your trading to the next level. And I'll be there with you every step of the way. Okay, good questions. Good question. I hope I answered both of those for you. If we have any more.
We do have a question in terms of what markets this is recommended for.
Well, once again, we always say that the best market is the one that makes you feel the most comfortable. Excuse me. I have students that are brand new strategy number 4 traders, and they say, oh my goodness, Steve, this works amazing. I'm a currency pair trader, and this works amazing with the currency pairs. And then I also have students that are swing traders that say, Steve, this works amazing on stocks, on weekly bars of stocks or 4-hour charts of stock. So that it's not as if one is right and one is wrong. It has to do with your own personal preference, because everyone is different and every market has a kind of a different energy. Some are more volatile than others. Also, some people have different risk parameters. Some people may feel comfortable taking a loss and sleeping with it overnight, where others may say, oh, I can't take a loss. I wouldn't feel comfortable. And so we provide you with different parameters for stop placements, for entries, ways to mold to your persona, as opposed to the opposite, which is the way most traders do. They mold themselves to the strategy, where we want to do the opposite. We want to make you feel comfortable. So we have upwards of 6 or 7 different entry points to make you feel comfortable. Some people like to enter right the market. Others like to place a lower limit to buy at a lower price. Others wait for more of a confirmation. There's lots of different ways to trade. Also, the same thing with stop placement. So there's really not one perfect market or time frame to trade on. That's why we say it's the best one is the one that makes you feel the most comfortable.
Right on. That's the end of the questions that we've got. I did want to talk a little bit more about kind of like the stuff that's included in Metastock and all the courses. So do you mind if I take it
Sure.
over?
No,
Right.
go ahead. Thank you so much. And thanks to everyone for attending. I really appreciate it.
All right. Thank you, Steve. Appreciate that. All right. Very cool. I also just want to talk a little bit about what's included here as part of the overall package. Of course, being a Metastock add-on, it's going to include the ability to scan. I love scanning. We were talking in a meeting that we were doing a little bit earlier this week. I think, and I've heard from a lot of our customers and our partners that scanning is something that we do best. I'm always running scans a couple times a day usually. And so, of course, with this, you're going to be able to scan for the entries and the exits. You're going to be able to have that expert advisor that's going to key into exactly when the buy-sell signals are, when those come in on the chart. And Steve alluded to this, but this comes with 12 training videos. And to kind of just show you what those are, I'm not going to read these all out, but they're very, very detailed in terms of the strategy itself, entry techniques, exit techniques, your stop and position placement guidelines. I read most of them anyway. Yeah, so there you go. But in any case, yeah, there you go. Very, very cool add-on. Normally it's $5.99. As part of the webinar, it's $4.99. As part of what we always offer, it's going to include a money-back guarantee. So you can try it out. We'll give you a 30-day money-back guarantee. That'll include the lessons, the access to the class. If you don't think it's helpful, you can absolutely get a refund. If you haven't used Metastock before, I'll just say, hey, Metastock has been the top rated software in its price category, and it's been top rated for 32 years in a row. And we'll give you a free trial. You can evaluate the software as well if you want. Totally free with a money-back guarantee, so your risk reward is really, really good. You can give us a call, 800-882-3040. You can go to metastock.com/sales-chat, or you can just place your order, www.metastock.com/specialist-trading. So I want to say thank you for being here today. Really appreciate it, making time. If you're watching this video in the future, make sure to like and subscribe. It helps a great deal. We appreciate it. Stay healthy, stay well. We'll see you at the next one.